Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Nandan Denim, one of the marquee stocks of the 2013 to 16 bull market and one of the largest client for denim making in India. But right now the stock is in the doldrums. So let's know why this is happening and what needs to be done in the stock if you're holding it. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about Nandan Denim. The company was established in 1994, and as I just mentioned, it is the largest denim manufacturer of India. And not only that, it also produces and is into the business of making spinnings, shirts, and yarn dyeing. So it is a complete stop for cloth manufacturing, and they have a lot of you can say facilities for making these products, and a number of clients, at least 12 to 15 marquee clients to which they supply globally in India as well as globally. Some of the clients names are Zara and so on and so forth. The company established in 1994 and has expanded not only in India but globally as well, as I just mentioned. About the numbers, well, the market cap of the company is about 170 crores, although at one point of time its market cap was around about 800 crores. So from an 800 crore market cap company in 2017 end, it is now more or less only 170 crore, and that's why you would think that I'm just letting you know about a company that is a mere micro cap, but it had a market cap of around 800 crores about say a couple of years back. The profit has dropped year on year 40% to 3.2 crores in this quarter, June 19 quarter, versus FY18, whereas the sales have been up 33%. So what does that entail? That clearly shows that how the expenses have absolutely ballooned, and how it has become very difficult to sustain textile businesses here in India because of a number of factors that I'll mention later on in this presentation. The debt has reduced marginally, but not no significant movement in that. So the margins have shrunk, probably pretty much it can be seen when the profit drops, then the margins would have shrunk with the sales going up. And it currently trades at 8 times earnings, and this is probably the single positive for the stock, because it is around about or less than the industry average of around 9.5 times. It only trades at 8 times, whereas it is a very good company and one of the market leaders in the business that they are doing. So in that regard, to trade at 8 times is pretty cheap, and it is at a discount. But then there are a lot of factors why this company is trading at 8 times. So why there has been a slowdown in Nandan Denim and probably in the sector itself? If you remember, and you can watch that video as well, the link is in the description as well as in this video, about the textile sector as a whole. That how the textile sector has folded over the last 2 3 years, post demonetization and GST changes and everything, tax changes, and Nandan Denim is no exception. So erratic power supply is one of the major reasons why the company is facing a lot of problem, because they would have to spend a lot of money in order to have the factories going throughout the day when there is no power supply. So there are expenses of UPS systems, uninterrupted power supply systems, as well as generators to keep the business going. Then the capacity they have expanded, and I remember during 2013 to 15 period, the management was on television and they were expanding capacity, because they thought that they'll get a lot of orders from global brands of jeans and clothes, etc. And they did get orders, but not to an extent that they had realized before. And this was the reason why they had a excess capacity at the moment, and they're not utilizing it to the core. Probably they are utilizing 60 to 65% of the capacity at the moment. Then there is a case that the business itself is very capital intensive, so you have to put in a lot of labor, capital, money, infrastructure into infrastructure, and then the machinery and everything you buy from abroad, and then you start a business or a factory. So setting up a factory is extremely difficult, and hence, since it is very capital intensive, then you would have to take in debt as well. And this is the reason why many investors shy away from such companies, because the gestation period for such a business is small, and hence is large, sorry. So the gestation period of realizing profits or earnings takes about 4 to 6 quarters, whereas in a consumption company or a pure FMCG company, it is like a cash business. So you sell a product and you get the cash into your PL account. The labor productivity has reduced, so it is not the same as it was before. And attached to this is the competition from other East Asian countries, or even countries from the neighborhood like Bangladesh, where the labor has become cheap, and they are having more productivity in terms of producing clothes. And hence people or companies from abroad are moving towards countries like Bangladesh, Vietnam, Taiwan, etc., or even Southeast Asian nations of Laos and Indonesia, rather than looking at India, because the labor cost has increased here in India as well. And then there is a high excise and import duties on the machinery if you try to import it into the country, which the government needs to look at during this budget, and probably that would help spur some, you can say, supply side problems, or reduce some supply side problems for this industry, and help them produce even better products at a lower cost. So my call in this stock and sector at the moment, until changes from the government doesn't take place, or until the numbers doesn't come in, is sell on rise. So if the stock goes up to say 50 60 rupees, you sell and buy into cash rich businesses. Avoid this company if you don't have it, or you have not bought it. Don't go by the value trap, or the trap that is trading at 8 times. I have already told you the reasons why it is trading at 8 times at the moment. The whole sector is under stress, so you have to take that into consideration before getting into any company which is related to textile, or selling textile products to these companies. So look for cash generating businesses, look for simple businesses which deal in cash, and you can make a lot of money in the long run. Put only 5% of your money in any mid or small cap, and only 10% of your money in a large cap or a good company, so that even if you lose all of it, you're not going to lose a lot compared to your portfolio. So this was my video on Nandan Denim. Please like and subscribe my channel and hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.